Good afternoon. This afternoon I'm going to do a screencast about the short trading of spread. And the reason why I'm doing the screencast is not to discuss how we make money with those. It's to ask you a few questions. We're just starting to experiment with day trading or very short-term trading. It can be more than one day, it can be a few days, but with the goal of rotating our capital quite frequently. We are experimenting with short-term trading of spreads. So let me show you a couple of examples of the things we did last week, me and Jennifer, and then I'll ask you a question or a few questions, and maybe you can help us with some of your thinking. So anyway, the first chart that you see on the screen is basically a spread, and we defined all of our spreads last week very easily. We didn't do any research, we just did market spreads against single stocks. Nothing very complicated, so don't ask me what was rational behind it. There was none. It was just a S&P versus a single stock spread, and that was it. It's not important for the time being, what the other side of the leg is. But anyway, on the screen what you have here is a spread defined as 3 times red hat, RHT, minus 1 S&P. And most of you know that Red Hat reported very good earnings last week, and the stock just shot up. I think it was up 20%, and you can see that on the 24th, the spread from the 23rd to the 24th, the spread went from about minus 10 to plus 730 when it opened in the morning. Jennifer and I were fortunate enough to put a spread on right as the market opened, and we rode that spread, and then we unwound it, and we tried to get back in it, and we never had a chance. But basically over 2 days, from Thursday and Friday, the spread opened at about 7:20, 7:30 or something like that, and then it went up to 13 and went all the way back down to 760. So that's interesting. It seems like there was an overshoot here, and it came back to the level at which it opened. I don't know if that point here is equilibrium, but that's going to be one of the questions I'm going to ask you later, to talk about equilibrium. And I want everybody on the community to participate. I want everyone in the community to put a comment on this. This is a multi-effort. It's not only one or two person that should contribute to this. It's very important we pick your brains. As you get information through those screencasts, by the way, everybody gets information. Got to roll up your sleeve and add information. If you don't, I'm going to kick you out of the community. The other example was, let me check, RIM. And this one we defined the spread as 2 times SPY minus 5 times RIM. And basically RIM reported very bad earnings, and on the open, the S&P on Friday morning, the S&P totally outperformed RIM, and RIM tanked. And basically the spread went from a closing price of about minus 58 on Thursday night to minus 25 on Friday morning. I told Jennifer when that happened that I thought it was very dangerous to go and buy that spread on the opening, and my thinking was there had already been quite a bit of volume on the stock, and I thought some value investors would come on the opening and make a try to buy the stock. And that's basically what we saw. We were right. The stock, the spread totally gapped, and We tried to sell it, believe it or not. We tried to sell the S&P and buy RIM with the intention of unwinding the spread very quickly, but we just didn't do it. We were sitting on the fence on that one. But then the spread came back down to about -30, and we had put a bid at -35. We were just too far. And then actually it went down to, it was about -30. And then the spread rallied to about -20 later on in the afternoon. The interesting thing about those two spreads is that the opening of the spread seems to give you a pretty good indication of where that spread is going to be trading around, which is pretty amazing. Talk about market intelligence there. But anyway, that's one of the spread we did. And the other one is a company called Accenture. The ticker is ACN, and here we define a spread of 5 times ACN minus 2 times S&P SPYs. And basically, ACN reported very good earnings and totally outperformed the market from Thursday to Friday. The spread closed at -3 on Thursday and opened at basically 20. Or actually it opened at 16.5 or something like that. And actually we bought some before the market opened. I think we bought at about $13 or something like that. Then it went up to 22 or 21 and we sold. And then on the way back down we bought, I think, at 17 or 18, thinking that we would come back up, and then we bought at 13 or something. The levels are irrelevant. But this thing just went totally against us. And I'm not giving up on that spread. It's an experiment. It was a very small position. We still have it on the book, and we're going to learn a tremendous amount with those things. So basically those are the 3 case scenario that we discussed, that we put position on. So my questions to you, I thought about this weekend, and the things that I'm thinking about when I think about those short-term spreads is the following, and I'm going to ask questions, but that's what I'm thinking about. Question 1, is the scenario a scenario of persistence or overshoot? Will the move persist, or are we overshooting? That seems to be the big thing you have to resolve when trading those things. The second question is, what is persistence? People have those persistence lists and stuff like that and things of that nature, but I just can't get exactly what is persistent. How do we measure that? Like, what is it? I have an intuition for what it is. I know what persistence is, but in terms of defining it in such a way that you can trade it and make money, not obvious to me, so we got to define that. And overshoot, where's the equilibrium? When do we overshoot and things of that nature? So I spent a little bit thinking about those questions. My first little framework, just put some stuff down and not be wishy-washy with this, but just to bring, okay, these are my first thought, and how can I make a graph of that? Let's take one example, ACN, Accenture. My algo on the quality side said to me Friday morning, this is a very high quality company. Has a lot of potential. The strength of the information that came in Friday morning versus market expectation, I would say it was probably in line. People got excited and then there was an overshoot. But maybe because it was a great company, maybe because it is a great company, it was already priced into the stock price. I don't know. We got to think about those things. Those are the things I want you to think. And in the case of RIM, negative quality company, it's not that it's a bad company, but in terms of how they're doing against Apple right now, it's not going well for them. or at least that's a market perception. Strength of the information, I think it was worse than expected, plus it justified what people were already fearing. Maybe it confirmed the fear in the marketplace, and maybe that was the thing in action on Friday morning, and the reason why the movement persists and the spread moved higher. So I want to get some of your thought about this. And also, it's a great idea to do screencasts, and I rarely see many of you doing them. I don't want to whine or something like that, but they are so important in terms of becoming more intelligent about your thesis that I want to encourage all of you to come up with a screencast at least once every 2 weeks. SMB Capital does it all the time. It's a very important tool. Okay, whining session and rant over. Thank you.